I wouldn't waste it trying to look rich. I'd use it to build a stronger financial future. If you suddenly had $10,000 today, would you spend it or use it to build real wealth?
If I had $10,000 in 2026, here's exactly what I'd do. Imagine waking up tomorrow and finding $10,000 sitting in your bank account. No debt, no bills attached to it, no one asking you to spend it. Just $10,000 that you can use however you want. The question is simple. What would you do with it? Would you buy a new car, upgrade your phone, take a vacation, or leave the money sitting in a checking account? Most people would probably do a combination of all four. And that's exactly why most people never turn $10,000 into real wealth. Because $10,000 isn't life-changing because of what you can buy with it. It's life-changing because of what you can build with it. So if I had $10,000 in 2026, here's exactly what I'd do. And before we start, this isn't a promise of guaranteed returns or personalized financial advice. It's simply a practical framework for thinking about how I would use the money. Let's start with the first thing I would do. Step 1, I wouldn't invest the entire $10,000. This might sound strange. If the goal is to build wealth, why not invest everything immediately? Because investing money you might need next month is not really investing. It's taking a risk with money that should have another job. So my first move would be to create a small financial safety net. I'd probably put around $2,000 into a high-yield savings account or another safe, accessible cash account, depending on my personal situation and available rates. Why? Because life doesn't care about your investment strategy. Your car can break down. Your laptop can stop working. Your income can suddenly disappear. An unexpected bill can show up at the worst possible time. And without emergency savings, you might be forced to sell investments at exactly the wrong moment. The goal of this $2,000 isn't to make me rich. It's to keep a financial emergency from destroying my long-term plan. And if I already had a fully funded emergency fund, I wouldn't necessarily need to allocate this much to cash. I could redirect more toward investing. That's an important point. Your financial situation determines the strategy. Step 2, destroy high-interest debt. Now here's where the plan changes completely. If I had $10,000 but also had expensive credit card debt, I would seriously consider using a large portion of that money to eliminate it. Why? Because paying off high-interest debt can provide a very powerful financial benefit. Imagine you have a credit card balance charging you a high interest rate. Your money isn't working for you. It's working against you. You could invest and hope for a certain return while simultaneously losing a large amount of money to interest. That's like trying to fill a bathtub while the drain is wide open. So before chasing investment returns, I'd ask, do I have expensive debt that needs to disappear first? If the answer is yes, that debt becomes one of my highest priorities. Step 3, I'd invest in myself. This is the part many people completely ignore. I'd probably reserve around $1,000 for something that could increase my future earning power. Not a luxury. Not a new phone. Not a designer watch. I'd invest in a skill. Maybe that's learning AI tools. Maybe it's sales, coding, video editing, digital marketing, data analysis, a trade, public speaking, or another skill with real demand. Because there's a difference between an investment that makes you 7 or 8% and an investment that can increase your income by thousands of dollars every year. Think about it. If spending $1,000 on education or equipment eventually helps you earn an extra $500 every month, that's potentially a completely different financial equation. The goal isn't simply to have money. The goal is to become someone who can create more money. Step 4, I'd put a big chunk into long-term investments. Now we get to the part most people think about when they hear the word investing. Stocks, index funds, ETFs, retirement accounts, long-term assets. If I had my emergency savings handled and no dangerous high-interest debt, I'd put a significant portion of the remaining money toward diversified long-term investments. For example, I might allocate around *5000** toward a diversified portfolio built around broad market index funds or ETFs. The exact investments would depend on my risk tolerance, time horizon, taxes, and financial situation. But the philosophy would be simple. I wouldn't try to find the next stock that will explode. I'd rather own a broad collection of productive businesses and give the investment time to compound. Because wealth building usually isn't about predicting the next big winner. It's about staying invested long enough for your winners to compound. Step 5, I'd keep some money available for OPPORTUNITIS. Let's say I have $10,000. After setting aside emergency savings, dealing with debt, investing in myself, and putting money into long-term investments, I'd want a small amount of flexible capital. Maybe $1,000 to $2,000 depending on the circumstances. Why? Because opportunities don't always arrive on schedule. Maybe a business opportunity appears. Maybe I find a valuable course. Maybe I need equipment to start a side hustle. Maybe the market experiences a major decline and I want additional money available to invest. Cash gives you something extremely valuable. Options. But there's an important difference between having cash for opportunities and keeping all your money in cash because you're afraid to invest. One is strategic. The other can become a long-term mistake. Step 6, I wouldn't try to get rich quick. This might be the most important part of the entire video. If I had $10,000 in 2026, I would stay away from the mentality that says, how can I turn this into $100,000 as quickly as possible? That question sounds exciting, but it can lead people into terrible decisions. They start chasing meme stocks. They put too much money into one cryptocurrency. They follow random influencers. They trade options without understanding the risks. They borrow money to invest. And eventually, the $10,000 they worked so hard to save can disappear. I'd rather ask a different question. How can I make this $10,000 become the foundation of something much bigger? That's a completely different mindset. Step 7, I'd focus on the next $10,000. Here's where things get really interesting. The first $10,000 is important. But the next $10,000 could be even more important. Why? Because once you prove to yourself that you can save $10,000, you've developed something more valuable than the money itself. You've developed a system. You learned how to control spending. You learned how to delay gratification. You learned how to increase your income. You learned how to invest. And you can repeat the process. So after receiving that first $10,000, I wouldn't celebrate by increasing my lifestyle. I'd immediately start asking, how do I get to $20,000? Then $50,000. Then $100,000. And eventually, the numbers start becoming much more powerful. So what would my $10,000 look like? Let's simplify everything. If I had my emergency fund handled, no high-interest debt, and a stable income, my rough framework could look something like this. $5,000 long-term diversified investments. $2,000 emergency or opportunity cash. $1,000 skill development or earning power investment. $2,000 flexible allocation depending on my financial situation *. But this isn't a magic formula. If I had credit card debt, I'd change the plan. If I had no emergency savings, I'd increase cash. If my income was unstable, I'd prioritize liquidity. If I already had a strong emergency fund and retirement savings, I'd potentially invest more. The point isn't the exact percentages. The point is giving every dollar a ** job. And here's what I would not buy. I wouldn't use the $10,000 to impress people. I wouldn't finance a luxury car just because I suddenly had money. I wouldn't spend thousands on clothes, gadgets, or vacations simply because I could. And I definitely wouldn't spend the entire amount trying to look successful. Because there's a huge difference between *** looking wealthy and becoming wealthy. Looking wealthy requires spending money. Becoming wealthy often requires doing the opposite. You need to keep some money, invest some money, and use some money to increase your ability to earn even more. That's how $10,000 can become more than just $10,000. The real secret. Here's the biggest lesson. If you gave two people $10,000, they could end up in completely different places 5 years from now. One person might have a nicer car, a bigger TV, expensive clothes, and almost nothing left. The other person might have investments, emergency savings, better skills, higher income, and a growing net worth. Same $10,000. Completely different decisions. That's why money isn't just about how much you have. It's about what you do with what you have. And if I received $10,000 in 2026, my goal wouldn't be to make myself feel rich for a few months. My goal would be to use that $10,000 to make my future self financially stronger. Because $10,000 spent can give you a temporary feeling. But $10,000 invested strategically can become the beginning of a completely different financial life. So if you had $10,000 today, ask yourself one question. Will the decision I make with this money make my future self richer, or just make my present self feel richer? That question could be worth more than the $10,000 itself. If you found this video useful, subscribe to the channel for more videos about investing, personal finance, and building real wealth. And remember, don't focus on looking rich, focus on becoming financially free. I'll see you in the next video. Please subscribe now.